world. Being with come back live in the garden. KY, what it do? Man, family. Hmm. Like I said, I had some. If you look at the title. Title was some social issues, some investment opportunities. Okay, and just on the social issues first, fam. Give me a couple of minutes. Let me wait a minute, real quick. I thought it was kind of crazy that I was doing some research and I came across something on the wire, and it's 8,000 stores, over 8,041 stores to be closing. All right, and they said like 3,000 supposed to be open, but the 8,000 stores that are closing, you got to ask yourself, why are so many stores closing? That's pretty easy. That's the easy one there, family. I mean, how many of you guys go shopping, to stores? It's e-commerce sales. Everybody kind of shopping online now. So, you got 8,000 stores closing, man. That's a lot of jobs. All right, that's a lot of jobs. And so, with the cost of living going up, those type of jobs, a lot of people kind of dependent on, especially like ones that's kind of graduated high school, like in high school. A lot of those jobs, those retail jobs, were jobs that people was using to kind of get started, to use as a foundation. But now a lot of those jobs are gone, and that's why I think it's really important. You get to check my videos out in the past, where I really stress in this particular climate, it's really time to reinvent yourself. Okay, and what I mean by reinvent yourself, there are a lot of things you can do out here that doesn't require you to have to go to school for 4 years, or go to school for 2 years. There are a lot of situations that you can get into where you can get a skill, right? Because right now, I mean, at the rate things are going right now, family, if you're not able to build robots or build computers or build software, that is basically where a lot of the jobs are going to be going. All right. So, let's make sure that we kind of look into that, especially younger people that are trying to get into this workforce. You're having a hard time kind of trying to get a job. Normally retail was there for you. With so many retail stores closing and so many malls closing, all the brick and mortar stores closing, it's kind of difficult to you guys get that start. I mean, even with fast foods, I mean, a lot of those fast food spots are going to be going to automation. So, even in high school, if you got kids in high school, I think it's time to start gearing them towards something that's going to be in demand in the future, and I mean like near future, because just having to get a job in a retail spot or at a fast food joint, a lot of that's kind of going down the wayside. Now, what I can say is a sector that's really booming that you can take advantage of is the rideshare industry. I mean, with the Uber Eats and all that, the Lyft. I mean, that particular sector, you can, as a youngster, uh, you know, gain some income and try to put back some change before you start doing what you want to do. But nevertheless, make sure it's something that you want to do, opposed to something that you have to do. Okay. But I got a question. I came across something, and it was about climate change. Now, personally, this whole climate change issue, I've been really kind of ambivalent about, because I've been doing some research and I haven't really seen anything that would make me think differently about my questions about the sun being 93 million miles from us, and I can still feel the heat, opposed to, this climate change where basically they're saying it's only been since 1970 an increase of 4.3 degrees. Oh man, I'm buffering out, family. Wow, they got me, huh? KY, that's on point right there. Generational wealth has to be built by building businesses. And I'm telling you right now, family, don't sleep on, you know, businesses that you can start in high school yourself. I mean, don't sleep on landscaping. You know what I mean? It's a lot of things that you can be doing out here that you can make some money to start putting your money back so you can start saving and you know building up your wealth. Don't just figure you have to go to college. I mean, remember, colleges today are so expensive where if you have to get a loan, you're gonna be behind the eight ball as soon as you get there. As soon as you get out of it, you're behind the eight ball. Okay. In fact, I'm doing a lot of buffering. I hope I'm not still buffering, but because I wanted to kind of go into the cost of living situation and inflation, because family, please prepare yourself to save your money, pay yourself, because in the next 6 months there are going to be some real increases in prices, right? So don't be surprised. And when I mean by price, I mean that everything that you're going to be buying in stores, those prices are going to go up, and it's going to go up because of the so-called trade tariff with China. All right. So don't be alarmed. Don't be alarmed when you see your prices go up. As much as they're going to go up in the next 6 to 12 months. All right. With that being said, I also had an investment opportunity that I want to talk about. And if you've there are certain stocks right now that are going to be pretty lucrative pretty soon, and those are gold stocks. Like I say, anything I tell you about investing or stocks, anything like that, family, from entertainment purpose only, I'm not telling you if I'm not doing it, you dig. And I want to tell you right now, if you are investing, if you do have the change, you want to put into the stock market, remember, a lot of this stuff is overvalued. But there is a sector right now that's on the rise, and that's gold. And the reason why it's so tripped out, because it's all a Ponzi scheme. Isn't it ironic that every time the economy gets stifled with the bond market, with the stock market, with the real estate market, people start moving their money toward gold, and it's been cyclical. I mean, this is what they do. You did, and so why not you take advantage of those opportunities? All right. And so right now, family, there's a couple of gold stocks out there that are trading at really low prices that you can get into and make some profits on it. All right. I mean, because just look at it right now. I've been looking at some of the analysts and following these cats, and right now they got a lot of people predicting that gold gonna be at $2,000 an ounce. It's already at $1,500 an ounce, like $1,527 an ounce, and so it was at $1,900 an ounce at one point. Now, like I said in my previous videos, I'm not an advocate of possessing gold itself, okay? But in order to take advantage of the fact that gold is going to be going up exponentially, how can I take advantage of it? Well, I can invest in gold stocks, okay? And remember, when the market crashes, that doesn't necessarily mean every sector of the economy for this investing going to crash. There are going to be certain sectors that are still going to be viable, and you can have a great opportunity to get in right now when it's low. DG, what it do? Minnesota in the house. Okay. So like I say, from an investment standpoint, family, look into these gold stocks. I have a couple of guys right here. I'm going to put in the description box and everything. So if you want to kind of check them out, I kind of did some research on them, and all three of them have Zacks buy ratings. And Zacks and Morgan Stanley, these are analysts that actually rate stocks that kind of give you an idea of what's going to happen. And so when this recession does go down, there are going to be some opportunities out there. All right. And so don't wait too late. But like I said before, pay yourself first and stack your chips. It's not an accident, Warren Buffett. And they put this information out there not for us. They want us to be watching the NFL and Kaepernick and all that kind of stuff. That's what they want us to be focused on. But when you hear that Warren Buffett's company is sitting on $120 billion in cash, what do you think he's doing that for? Because they know when this recession happens, which is going to happen because it has to happen because of the kind of system we're in, this fiat currency money-making system, it has to happen, and it's time. But this one, family, is going to be worse than a lot of them. I mean, the one that happened in 2008 was bad, okay? But this one's going to be bad because it's going to affect not only the global market, but it's going to affect every sector of the market. It's going to affect the mortgage sector again. It's going to affect the stock market, of course. It's going to affect the bond market. Right now, family, the bond market is already inverted, okay? And I think I talked about this earlier. Anytime the bond market has an inverted yield curve, And what that means, family, if you want to put your money in U.S. Treasury bonds, a 2-year, 5-year, 10-year, or 30-year, then you're going to get interest on that, right? You're going to get paid every month, and at the end of that period, you're going to have all your money guaranteed. You did? But when the bond market goes and starts inverting in the curve, instead of going up like this, it's looking like this, then what that's telling you is that the government is paying more on a 2-year bond than a 5 and a 10-year bond. So what sense does it make for you to put your money in a longer 5-year, 10-year bond when it's giving you more interest on the 2-year bond? Every time that's happened, family, and you look at the history of it, there's always been a recession. There's always been a market correction, okay? Because the bond market, and guess what? The Federal Reserve is doing it. It trips me out that a lot of people, don't do their research on this. It's planned. It's scripted. The Federal Reserve, okay, what they're going to do, they're going to start, because the interest rates are so low, they can't do anything but raise them. And what's going to happen when they raise interest rates? Bam, the market going to crash. All right? And when those interest rates start rising and those mortgages start going up, man, that's when we're going to see a lot of problems. And once again, family, I told you earlier, okay, about these shadow banks. These banks that have all these mortgages that they are pretty much made bonds. And once these mortgages go bankrupt, once these mortgages flop, then the shadow bank's going to flop, and then the whole mortgage sector is going to flop. And so guess what? For those that didn't prepare themselves, that didn't pay themselves first and sit on some cash, there's going to be a lot of real estate opportunities out there for you. The gold stocks, I'm looking at them right now. You dig? Those are the ones I'm looking at. But quiet as kept, these particular gold stocks, I'm looking at as growth stocks, those that are going to grow. And I'm going to try to get capital gains off of, opposed to, this particular dividend situation. You dig? So when I know that a particular sector is going to go up, then what I do, I like to get into it early, and then, like I say, have a game plan. A lot of people get into growth stocks and get greedy and just let it ride, and then next thing you know, the growth stock drops. No, you got to have a strategy, have a plan. So, like I say, one of these stocks that I'm talking about is $3.28 a share. What I'm trying to make, double that. You did. So once it gets to $6, $7 a share, bam, I'm gonna get my money. I'm not gonna wait, because I'm still be checking out the fundamental and the technical analysis of these particular stocks. Okay, and so that's one of the things I try. That's one of the things I always do, family. Don't ever invest in a company until you checked out their quarterly statements, until you looked at their financials, their income statements, their balance sheets. Okay, and especially their balance sheets, family, because the balance sheet is the skeleton of a company. They tell you right there whether or not the company has money and what kind of bills it has, short term and long term, and what type of investments does it have. And when you can look at that and it has way more assets than liabilities, that's the company you want to probably look into. You did. But when you look at a company's balance sheet and it has way more liabilities than assets, you look down on the bottom where it has the shareholders' equity and it's in a negative, you don't want to deal with that company. You did. And this is the thing that as investors you want to do, you want to be active in. Now, when you just give somebody else your money and let them do it, are they going to do that due diligence and come and tell you that? No, they're just going to probably give you, just put money in stocks so they can get that commission. That ain't real. That ain't fly. Ryan, what's going on? All right, let's see here. Yeah, this is going to be, DG, this is going to be one of the worst recessions since the Great Depression. I mean, all the analysts are saying it. But that's the beautiful thing about it. Like when there's blood in the streets, that's when we eat. You did. Unfortunately, a lot of people ain't digging it on that end, where they not building up their wealth. Because, like I said, I've done this research on this. And all you gotta do is do the research. I mean, 1987, okay, 99, 2000, 2008. All right, it's time. You did, and it goes all the way back to the Great Depression to 1929. All right, and guess what? The Great Depression came what? Right after The Roaring Twenties. I mean, when times were great, everybody was making money, and then bam, Great Depression. And who did it? The banks did it. The central banks did it. Family. The United States have been on central banks since the 1780s. 1787 was the first United States national bank. You did? So this game has been played, and that's why those that are wealthy continue to stay wealthy and maintain that wealth, actually build that wealth, because they know every 4 to 7 years there's going to be a crash dictated by the Federal Reserve, and those that's in the know are going to be able to gain wealth from it, and those that are not are going to, you know, actually be detrimentally affected by it, especially these 401ks and these pensions. Think about it. I already told you Social Security is not going to be around. Okay? So like I said, family, just joining me in the garden, family. I was talking about a couple of things, some social issues. I got into some investment opportunities. You dig? And what I was tripping on, if you didn't get a chance to watch my video earlier when I was talking about Colin Kaepernick, family, what is your thoughts on that? I thought it was pretty outrageous. I thought it was pretty hypocritical. And I said just months ago, I said, man, come on, man. When Nike signed Kaepernick, I knew the jig was up. I knew it was all planned, because now he's going to be back in the NFL. So what happened to your social justice warrior title? You did? It's all a scam. I mean, President Trump just awarded Jerry West. And some of you cats that are younger may not know who Jerry West is, but Jerry West just got awarded the Presidential Medal of Freedom. Now, I don't know who he freed. All I know, he played basketball for the Lakers. He was a general manager, and he received the Presidential Medal of Freedom. Come on, man. See, that's what I'm saying. That's why it's important to pay more attention to the yield curve, okay, of the U.S. Treasury. That yield curve tells you a lot about what's going to happen with whether or not going to be a recession. Pay attention to terms like quantitative easing and quantitative tightening. They say this stuff so frivolously on the television because they know a lot of people are not paying attention. But all quantitative easing is, family, is when the Federal Reserve start printing a lot of phony money and throw it into the economy. And then what does that do? It raises inflation, because remember, supply and demand. Anytime you flood the market with more money, there's more money out there than the product. And so what happens? The product has to go up in price, raising what? Inflation. That's quantitative easing. And then, of course, it's quantitative tightening, where then they start taking the money out of it, selling the bonds, okay, to raise interest rates, to lower prices. So it's like a cyclical type of situation. It's the economic curve, family. And see, this is the information that we need to be more cognizant of, not Kaepernick and not the stuff that's going on with that other stuff, because it's irrelevant, all right? This is going to be a bad recession soon, family, all right? So make sure you're ready for it. Hey, Deborah, how you doing? Okay? So like I say, is anybody out there concerned about climate change? Okay? Because like I say, since 1970, the temperature has risen 4.3 degrees. And they're saying, how can humans be able to survive with this climate change? I'm inside right now, and it's pretty cold in here because I got the AC on. I'm pretty sure you guys are too. That's how you survive. And see, what's the detriment? Because I know the animals are still adapting, plants are still growing, so this climate change issue, family, that the politics are trying to, put on your mind and your subconscious, you got to be, please don't forget to use the 5 senses the Most High bless you with, because see, that's the thing. Remember, a nation full of analytical thinkers, critical thinkers, that's not conducive to a capitalistic nation of wealthy people and regular people. That doesn't work, because then the people that's analytical thinkers are going to eventually say, wait a minute, this is not right, and so things are going to change. You did? I mean, just on a smaller scale, look what's going on in Hong Kong. Okay? In Hong Kong right there, the protests are really bad. And if you don't know what's going on in Hong Kong, that's why I titled this Social Issues. Not only just national, but international. Family, what's going on in Hong Kong is this. they're protesting because Hong Kong family is not really a part of China. Okay, Hong Kong actually was colonized by Britain, by England, and England, after so many years, granted Hong Kong or gave Hong Kong to China under the guise that Hong Kong could still be its own democratic nation. Okay, like a two-state nation. It's equivalent to family to Israel. How you have Israel and Palestine was a two-state, right? But only difference between that, Israel don't really recognize Palestine as two-state. It's kind of the same thing that's going on in Hong Kong and happened in so many years that now the people of Hong Kong is protesting because now the government of China is pretty much uh, arresting those in Hong Kong that's talking bad about China. You did? And so now there's this big conflict, and all the people out there in Hong Kong, a lot of students, a lot of citizens are out there protesting. And it's getting violent. Okay? It's getting violent. The president of Hong Kong just, she said she tried to resign, but she can't. So, I mean, when you think it's bad, it's really not as bad as you think it is because, and when you think that you really fight for your freedom, are you really? All right? Because the only way really, family, that you can really fight for your freedom here in America is to basically gain, financial freedom. Because see, with financial freedom, then you're able to, make a life for yourself where you can dictate pretty much your existence. When you have to depend on the government, when you're depending on pensions, depending on 401ks that may not be there, and when even they tell you that may not be there, family, that ain't cool. All right, so I just kind of want to come back with a little information on that, and like I said, much love, and I really feel it bad for the not the millions, but the hundreds of thousands of people out there in the Bahamas and South Carolina. I mean, there are thousands of people in Bahamas right now that are still missing. All right, and my heart goes out to the people out there in the Bahamas, and there's over 200,000 people out there in South Carolina without electricity. You did so. When you think your situation is bad, I mean the situation always can get worse. So the best way to do that is kind of take more control of your situation. Please, family, if you're still dealing with Wells Fargo and Chase and all those banks that not giving you the money you need on your money, all right? Because remember, the Federal Reserve wants to lower interest rates in September. And what does that mean for your money and savings account? That means it's shrinking. That means you're not making money on the money that the bank has in there. So, family, please look into those high yield savings accounts, i.e., Ally, BNC. There are a lot of banks out there. Do your research. All right, that's giving you 2%. That's more than 0.1% or 0.03%. You did. So it's the effort that they know you're not going to put into. They know you're not going to take the time to call the banks or do their research. Okay, find out that the yield curve that the U.S. Treasury Bank or that the U.S. Treasury, which is supposed to be the most risk-free area to put your money in Treasury bonds, now instead of giving you 2%, now they're giving you 1.4%, or to put it worse, 2-year bonds. They're giving you more interest on 2-year bonds than 10-year bonds. Come on, man, what's that? You did? So, make sure, family, that, you kind of look into those things. And like I said, there's going to be great opportunities out there for you when this market crash. And it's unfortunate for a lot of people, family. I just can't reiterate enough how, please, if you contribute to a 401k or 403b or any type of pension, not pension, any type of retirement plan, look and find out what your money's going to. Don't just frivolously contribute money to the so the way up. My company's matching it. But guess what? That match is also going to be lost by 40 or 50% when this market crashes. So why not hedge your losses by contacting whoever it is that your company has a 401k through? Find out who your account manager is that's handling your funds, and find out what particular mutual fund is your money going to. And if it's a variable fund rate, then you know that if it's variable, then it's not gonna be good for you because if they finna lower interest rate, then guess what? Your money gonna lose money on that. Okay? So tell them you want to put your money in a fixed rate mutual fund, following the S&P 500 or all bonds fund. Okay? But in something fixed. All right? And then if you know, like we know in the garden, that this market is going to crash, then why not say, hey, these contributions I'm making to my 401k, if you're in my age group family, now I'm talking to cats in my age group, guys, I'll be 51 in a couple months. You know, I can't afford a 40 or 50% loss. You did? You're in your 20s or 30s, you know, like I say, what goes down, gonna go up and everything like that. So you have time to gain those losses. Cat like myself, I can't afford that. So what I basically would do, or what I've done, is I've trimmed that contribution to my 403b and placed more money in cash, liquid cash that I have access to. So when this market does crash, I can go ahead and do what I have to do and not have to worry about, you know, having access to cash. You did? As well as the cash that's in my 401k. Not my 401k, but my IRA, the individual retirement account. If you haven't got that done yet, family, get that done. Okay? A Roth IRA. And also, guys, they have traditional IRAs as well. Okay? So you have the Roth and the traditional. Look into that. And it's never too young to start. All right? I mean, like I say, there are some calculations. I'm going to come back tomorrow. There are some calculations that if you deposit, you know, so much money a month in your IRA, by the age of 67, you have $1 million in that. And that's just tax-free cash. You did? And that ain't even saying the cash that, you know, you can invest with. That's just regular $1 million worth of cash. And I'm gonna come back tomorrow, fam. I got that information to let you know exactly when you're 20 years old, how much you have to deposit, 30 years old, 40 years old, 50 years old, and so on and so forth. Okay? So we're gonna come back with that tomorrow, fam. So I hope you enjoyed the garden, man. Hope this was a good food for thought. Like I say, just to reiterate, climate change since 1970 has been increased by 4.3 degrees. Yes, it's hot out there, but I'm from Texas. Like I said, if I want to get out of the heat, I just come into a crib or go inside, okay? Or just wait till the wintertime. You did? And like I say, the Kaepernick situation, hypocrisy at its best. I've always known there was something up with it because it smelled fishy. NFL has been rigged for years. I mean, just go back to the Super Bowls with the New England Patriots and what happened to New Orleans here not too long ago. Okay, I even go back to when the Pittsburgh Steelers was still in the Super Bowls back in the day. The third eye wasn't open then. It is now. Like I say, no disrespect to all those professional athletes out there, you know, getting their paper. They doing what they got to do. Okay, but what they don't understand is that, you know, it's above them. It's bigger than them. A lot of them do. But when you're in a situation where you know there's a huge discrepancy with who you are under in reference to management, in reference to ownership, you got to know something is going on with that picture. You did? When there are no Afro-melanated owners in the NFL or the NBA, but they're predominantly Afro-melanated athletes out there that are making these cats millions and billions of dollars. And there are no schools being built, no hospitals being built, no libraries being built. Come on, man. So, you know, no disrespect, but like I say, as a whole, like I said, you got to look at things from a macro standpoint. Like I said, we get caught up in the bread and circus and just start looking with these eyes opposed to this eye, and you get caught up. You dig? So, like I said, family, the bread and circus is strong, okay? But like I say, understanding this financial literacy, ain't nothing wrong with enjoying some teams. Me personally, I don't watch sports anymore, but golf, right? Because that's my thing. And chess, because it's my thing. But as far as wasting time on, you know, 2 or 3 hours, you know, when I can be improving my situation, I think that's where it's at, family. Like I say, if you didn't get a chance to read the book Rich Dad Poor Dad, make sure you check that out. The Intelligent Investor by Benjamin Graham. Motley Fool's The Dividend Guide, okay? And like I said, I'll be coming back with those numbers so you'll know, like when you start that IRA, how much money you have to save every month to have $1 million by the age of 67. Hey, Deborah, like I say, It's only real when our senses say it real. Come on, man. Our senses have been ignored since yay high. That's why we go from kindergarten to 12th grade, right? And the tele vision programs us. When the pineal gland gets calcified by the diet, and see that's information that's not really taught about the pineal gland and the calcification of the pineal gland, how just changing your diet to more of a plant and fruit based diet. I'm not telling you just be vegetarian. I'm not saying that. The body's way stronger than that. But I'm saying, for a majority of your diet to be plant based, okay? To drink more water, you did, out of glasses, opposed to plastic bottles, right? Getting more sleep, meditating more, right? You will see a difference in your consciousness, and you won't be able to understand it, but you're gonna notice a difference. But it's not gonna happen overnight, and it's not gonna happen outside your body. It has to happen inside your body. And the only way that happens is if you let your health be your wealth by putting healthy foods in your body. You did? So, fam, I'm gonna get on out the garden. Thank you, Deborah, Marcus, Ryan, KY, DG. Man, thank you guys for joining. And in the meantime, between time, any more time, sorry to bring you joy, family. And being with us is going to be out of 5,000. And I'm out.